Welcome back to Fearless Trader Market Watch. In today's video, I'll break down Friday's sharp sell-off in the S&P 500 futures, key supports getting tested, and the bears taking full control. But are we still in a bigger macro flag pattern, and can we see a bounce next week? Stick around as I go over the exact levels that will determine the next move in the battle between the bulls and bears. Let's dive in. Hey traders, how you guys doing on this Saturday? Hopefully you guys all had a great week. I know it was a hell of a Friday. But yeah, hopefully you guys are having a great weekend, getting the charting and your analysis done, preparing yourself with a nice plan, heading into the next week's session. But yeah, let's go ahead and get into this Friday's recap. On Thursday, I shared my newsletter and the market outlook video where I laid out a bullish and a bearish game plan for Friday's session, right? For the bulls, I basically was mentioning that they needed to reclaim the 61.45 to the 61.55 zone to maintain the further upside, especially the 61.55 as it was a key resistance of the top of the flag. And with the critical support level being at 61.20, right, which had been tested previous times, multiple times, and it was a key magnet level. In the ideal bullish setup, required a bounce off of the 61.20 through the 61.30 zone, followed by a strong reclaim of that 61.45 to 61.55 to keep that momentum to the bulls. And for the bearish scenario, I mentioned that the 61.55 was key for the bears, right? As long as this level held, it would signal further downside, as long as there was, selling pressure at the 61.55 level or the 61.45. But if we got the rejection at that 61.55, the first target down for the bears would have been the 61.45. But since we had the rejection at the 61.45 and never really got to that 61.55 top resistance, that the next level down would be all the way down to the 61.20. And if bears got momentum and broke that level down, that we could really see some downside down to that 6100 and could lead lower to that 6085 and lower. So then when we came into Friday on the overnight session, right, when we opened up, the bulls struggled right off the back, struggled to get through the 61.45, never really got there, maybe like the 42 to 43 area. So they pretty much struggled to get through there. So seeing that, the struggle from the bulls kind of linked towards the bias of being on the short side, especially not be able to break that key level. Leading to the market open, we had like some COVID rumor news, and then we had some Trump news, some tariff news, and he was just talking all day, and it just started creating that tape bomb sell-off. The bulls attempted to hold the 61.20, right, the first push down. They attempted to hold it, but failed, and the bears just broke it down and pushed on down to that 15, which that just pretty much got sliced through and headed straight for that 6100 level, which the bulls really needed to reclaim that, or at least hold it, right? Then that 6105 area, that back test, the bulls needed to reclaim that anywhere from 6105 to that 6110 area to keep that 6120 area back intact for the bulls. As we came back to test this 6105 area, we were pretty much met with heavy selling pressure right on that back test, which kept the downside intact. The bears pretty much controlled price action throughout the whole day, driving price down to a low of 60.20, well 60.24, but right above the key 60.20 support level, right? The bigger picture, the macro trend of it, despite this sell-off, we remain in a big macro pattern flag, a bull flag. So we're pretty much at the bottom of that. As long as the support holds, right, we'll get a rally back to that 6100. And anything higher than that, if we, base above that 6100, we could easily target back to that 6120 zone through the week. But yeah, the key levels, right? We'll start off with the 6020 level. That's going to be our most important. We need to hold that. If we lose that level, we'll test that 6,000, right? Then 60.85, another support. The resistance levels we want to see on the bear side is the 60.35 resistance, 60.48, and the 60.55 level, right? The market outlook going into next week, from the bullish perspective, the bulls must defend the 60.20. That's going to be our key to keep this flag pattern intact and attempt to rally back to that 6100s. A reclaim of that 6100 level could provide momentum towards that 6120, which was that strong key magnet level that was previously tested multiple times. And for this bearish perspective, I would say, you know, the bears will target a breakdown of the 6020, right? We lose that, then first target down on the short side will be that 6,000 level. And if that 6,000 level fails, right, we could see a deeper sell-off leading to that 60.85 in play, which that right there will be the last line of defense for the bulls. We do not want to lose that on the bull side, right? So long as this starting the week, the 60.20 level holds, we'll see how Sunday plays out tomorrow when we get to that opening session. But yeah, the final thoughts, you know, patience is key. Have that discipline. Don't force any trades. Just SOH, sit on your hands if you have to, and just let these levels guide you, right? Have that plan, follow your plan. And yeah, hopefully you guys have a great rest of your weekend. If you're in the Discord community, I'll see you there. I'll post a link in the description. If you guys want to check it out, come hang out with us. Usually on voice, starting from 4 to 4:30 a.m. California time. I'm pretty much there all day. But yeah, you guys have a great weekend, and I'll see you guys tomorrow. Let's have a good one.